Welcome back, learners. So this is Manisha, and in today's video, we are going to solve the remaining question of the budget. And after doing this, we are done with the budgeting part. Okay. So as I said, one of my viewer has requested that she's struggling to solve this question. You can see in the comment box. So for her, I'm making this video, and in today's video, the budgeting topic will be completed. But before I start the today video, let me tell you something. So if you are using the Kaplan exam kit or BP exam kit for the practicing extra question, then that's fine. But as you know, ACC has launched its own resources, that's a study hub. So please make sure to use that as well in your preparation phase. Okay. So let's start the today video. That's a flexible budget one, and we will do the remaining question, and we will complete this topic in the today video, and after that budgeting will be fully completed. So first question is 306, and the question is saying what is the flexible budget? Okay, so first option is saying a budget for the semi variable cost only. So do you think in the flexible budget we only use the semi variable cost? No, right. So flexible budget cover all types of costs like your fixed, variable, not only semi variable. All right, so that's why it's incorrect. Option B, a budget which by recognizing different cost behavior pattern is designed to change as the volume of activity level changes. Activity changes, yes. So basically, flexible budget, I mean, is a budget where we prepare, we simply just prepare the budget for, we flex the actual level of activity. Sorry. Yeah. So flexible budget, we simply adjust the budget for the different level of activity. So when actual activity is different from the budget we have prepared, in that case we need to prepare the flex budget where actual level of activity is taken. Then we will flex the original budget. Okay. So it recognizes that some costs are fixed, some are variable, and some are semi-variable. But as the actual level activity level changes, the flexible budget updates the expected revenue as well as cost accordingly. Okay, so yes, this option, this statement is correct. Yes, the budget is a flexible budget is a budget which by recognizing different cost behavior pattern is designed to change as volume of activity changes. Yes, and the third statement is a budget for 12-month period which include planned revenue, expenses, assets, and liability. So basically 12-month full budget, it's more sounds like the master budget, right? So that's why it's incorrect. And option D says a budget which is prepared for a rolling period which is reviewed monthly and updated accordingly. So this is the actually your rolling budget, right? So which is updated monthly, okay, not the flexible one. So that's why option B is correct. Now 307, what is the purpose of a flexible budget? So here question is asking regarding the purpose of the flexible budget. And the first one is saying, okay, the first one is saying to cap this discretionary expenditure. Do you think this is the purpose of the flexible budget? No, this sounds like controlling spending on the non-essential items, right? So this is more related to the budgetary control, or you can say as a cost control, but not specifically to the flexible budget. Okay, so flexible budget, it's more kind of like focus on the to flex the cost and revenue to the change in the activity level, not just capping the cost. Okay, now option B, to produce a revised forecast by changing the original budget when actual costs are known. Again, this is not the flexible budget. Why? It's just only describing regarding the revising or reforecast, right? And as you know, when actual costs are known, we do a variance analysis, not the flexible budget, right? Okay. Then the next is, option C, to identify revenue and cost at different budgeted activity level. Yes, this is what the exactly purpose of flexible budget, where we flex the cost and revenue, just changing the activity level. So this is exact purpose, where we adjust the cost and revenue as per the actual or expected activity level, and obviously it's help in the performance evaluation as well as understanding the cost behavior. Now, last, to communicate the target activity level within an organization by setting a budget in the advance of the period to which it relates. Right. So again, this describe your fixed, or you can say your master budget, which is created before the period begins and communicate the targets to the, respective person or the organizations. Right. So flexible budget are about just only changing the figure as per your changing activity level, or which could be your actual activity level during the period, not just setting one fixed target. Right? Okay. So next question. What is the fixed budget? Okay. First one is saying a budget for the single level of activity. Yes, fixed budget is prepared before the period begins, and it is only prepared for the one level of activity, right? And it does not change even the actual activity level turns out to be more or less than the what is we have prepared or planned. But yes, once activity level changes, we flex those budget, but this figure will not be changes. So that's why option A is correct. Okay. And next is a budget used when a mix-up product is fixed in advance for the budget period. A fixed product mix has nothing to do with whether the budget is fixed or the flexible. So it's wrong. This option is talking about the fixed product mix, like deciding to produce 60% pen or 40% pencil before the period starts, right? But that's about the sales mix, or you can say the production mix, not about the whether budget is fixed or the flexed one. Okay. Next is a budget which ignore the inflation. So again, this is incorrect. Whether the budget includes or exclude inflation, it's different things. But a budget can be fixed with inflation or without inflations, right? So ignoring inflation is not what makes the budget fixed or the flexible. So that's why it's incorrect. So regarding the fixed budget, it's a fixed level of activity, not about the inflation. The next we have D, an overhead cost budget. So overhead cost budget is only just a part of the whole budget, right? Which includes your salaries, rent, right? But fixed budget is the type of budget that will include all type of cost as well as revenue based on the single level of activity, not just overhead budgets. So overhead cost can be happen in your fixed budget as well as flexible budget or other types of budget, right? So that's why again this option is not correct. So next we have, which of the following statement are correct? Okay, so first one is saying a fixed budget is a budget that considers all of the organization cost and revenue for a single level of activity. Exactly what we learned just in the previous question. So that's why it's correct. Right. This is the exact definition of the fixed budget. And as yes, fixed budget will cover all type of cost as well as revenue for a single level of activity. The second, a flexible budget is a budget that is produced during the budget period to recognize the effect of any changes in the price and the method of operation that have incurred. So, a flexible budget is not necessarily produced during the period. Again, it is prepared in advance, but designed to adjust the level of activity, or it is just flexed to the actual level of activity, not changing the price or the methods. Okay. So regarding the change in the price and the method, it's just more and less related to your revised budget or forecast, not the flexible one. Okay, so that's why option 2 is correct. See, in this kind of like question where they have said option A 1 and 2, 1 and 3, you can just try to figure out option by elimination method. See, so as we know 1 is correct, in that case option C is already out. Answer could be either A, B and D. And we got to know option 2 is incorrect. That means option D is out and option A is out. So that means your answer is straightforward, is B, 1 and 3. Right. So you can try to find out the answer by elimination method. Okay. And the last is organization can use the budget to communicate objective to their manager. So it's one of the key purpose of the budgeting. Yes, to ensure to communicate the objective to their manager so that they can ensure all department and as well as manager are working on the same target or they know the target or the expectation. Okay, so this will help in the coordination or the alignment, right? So that is option 3 is correct. All right. So let's move to the question number 310, which is your calculation part. Okay. So Oswald Press produce and sells textbook for the college, schools and the college. And the following budget information is available for the year ending 31st December 2006. So they have provided the budgeted figure and the actual sales figure. Right. So what is the flex budget? So see, here you can see the activity level is not same. So we can't compare these two things. So in that case, to make it comparable, we need to prepare the flex budget. So flex budget means we will prepare the flex budget. We'll flex this budget for the actual level of activity, which is 100,000. So let me copy paste this information on my Excel. Yeah, so here it is. So I have copy paste this information from the question. So now, see, if question asks you to calculate flex budget or the profit, so they will only provide one level of budgeted activity or two level of budgeted activity. So in some case, you might have to use high-low method if the two level of activity is given. But here only one level of activity is given. So that means we need to calculate per unit for all of these one. So let me show you how. Yes, here it is. So sales revenue for one is 120,000. So that means per unit will be 10. And how I have calculated this 10? Simply dividing this by 120, 1, 2, 3. Yes, this will give the 10. And again, variable printing cost is 360,000. And if you will divide 360,000 by 120,000, this will give you the per unit cost of 3. And similarly for the variable production overhead, just divide 60,000 by 120,000 and it's 0.50 per unit. But for the fixed production cost, it's fixed. So we will not change this, right? So we can't just change based on this level of activity. So it's fixed means for 120 or 100 or 50,000, it will be incurred same, right? So now let's calculate for the flex profit. So for that we need a flexed figure. So that means let me do this. Yes. So here it is. So for 100,000, I have just multiplied. For 100,000, I have multiplied this with this figure. Okay. And for rest of the things, yes, I have done the same. Yes, as this is fixed, so no issue at all. So I have just multiplied 100,000 activity with the per unit. Again, 3 into 100 and 0.5 into 100. And for the fix, it's a fix. So now summing all of these, you will get to know that we are getting a loss of 10,000. Right. So here it is. So yes, here it is. So you can do this like this minus sum. Yes, we are getting the loss of 10,000. So that means our answer is B. Okay? Yes. Now, let's move to the next question. That is the 311. And the question says, which of the following statement is true? The first one is, a fixed budget is the budget that remains the same from one accounting period to next one. So it's incorrect. Why? Because this statement is describing our static budget, not fixed one. And fixed budget is obviously just we prepare the cost and revenue figures for the one level of activity, and that is not going to repeat for the next period. Okay, so budget are usually made fresh, but for the each accounting period. So that's why option A is incorrect. Now option B, a fixed budget is produced for one product for different level of activity. No, this is the definition of the flexible budget, where where fixed budget are flexed for the different level of activity. Okay, so that's why it's incorrect. And option C, flexible budget is designed to change as the activity level change. Yes, this is what exactly definition of the flexible budget. So we adjust the cost as well as revenue based on the actual level of activity. So that's why it's incorrect. It's correct. Option D, a fixed budget is useful when comparing budget figure with the actual figures. Yes. So this is again incorrect. So it's basically weakness, not the useful. Strength. Okay, so if activity level changes, the fixed budget won't adjust it. So it's obviously comparison is misleading, right? So it's unlike to unlike comparison. So as I said, if you compare this two figure, it will not provide the correct information because activity level is changed. Right, so it's unlike comparison. To make a like comparison, we need to compare actual figure with the flex budget. So that's why it's incorrect one. Now let's move to the question number 312. So again, this is the calculation part, and this is same as we did in the question number 310. So let me copy paste this information again. So I have done this question for you. Here it is. So it's a sales figure. I have just copy paste this information from the question given, and again I have calculated the per unit rate. So I divided this figure with the unit, and this give me the 100. Again, 40,000 divided by 1,000, this give me 40, and 20,000 divided by 1,000, this give me 20, and 15,000 divided by 1,000, again give me 15. But the fixed one, it should be fixed. It will not be changed, right? Now we have to multiply this with figure with the actual sales, which is the 1,200. So 100 into 1,200, it will give me this one. You can see I have just written down the formula over here. And again, 40 into 1,200 will be 48,000. This will be our direct material cost. And 20 into 1,200 will be 24,000. This is the direct labor cost. And similarly for the variable, I have calculated. And for the fixed, it will be same. It will not be changed. Only one level of activity is given. So again, subtracting the total cost from the revenue, it will give the profit of 20,000, right? I think you guys will be now pro in solving this kind of question if you will follow this approach. See, if the question had given single level of budgeted activity, one activity, not the multiple one, in that case you can use this format. But if they have provided a two level of budgeted activity, in that case you need to think whether we need to apply the high-low method, if there is any semi-variable cost. You just need to check, right? We have solved a few questions related to the same in previous video, so go and check it out at least one time. Okay, now question number is 313, and the question is saying, when budgeting, what are the variable cost conventionally deemed to be? Okay, so let's evaluate the option. So first one is be the constant per unit of output. Be the constant per unit of output. Yes. So variable cost are those costs which will change in the total as the level of activity changes, or level of production changes, or level of output changes. But per unit wise, they will always remain constants. So that's why option A is correct. Okay. Now option B. Sorry. Variable per unit of output as production volume changes. Vary per unit of output as the production volume changes. No, per unit cost, per unit. The it variable cost per unit will always be same whether the production volume changes. Yes, total cost will change, but not the per unit one. Okay, so it's incorrect. C, be constant in the total when production volume changes. So when total cost is constant, like in this case the fixed cost is in the total is constant, so that means it's the fixed one, not the variable. So that's why option C defines to the fixed cost, not the variable. That's why it's incorrect. Okay, and the last, vary in the total from period to period when production is constant. So if production is constant, variable cost should stay the same in the total, so it will not vary. Okay, so that's why again it's incorrect. Okay. Okay, now let's move to the question number 314. Yes, the FLTT makes a single product for which the budgeted cost and activity for typical month are as follow, and budgeted production and the sales is 15,000 unit. And okay, so these are the per unit cost. Okay, these are not a total figure, it's a per unit cost. Okay, so per unit cost of direct material, so everything is per unit. Okay, and standard selling price of product is 220 per unit. During October, only 13,600 units were produced. So, what is the total budgeted cost allowance content in the flex budget for October? See, a student used to do the mistake in this question. First, they blindly assume the profit. The question is asking for the profit. No, question is asking for the total cost. So you need to look for this. Other thing I will highlight while doing the question. Let me solve this. So here it is the question. Yes. So here, as per budgeted sales unit was 15,000, but actual was 13,600. That's why the flex, for the flex budget, the unit will be 13,600. Now the selling price is 220. So it's a per unit. So it's simply, we will multiply this with the actual sales unit. So 220 into 13,600, it will give us this much amount. And again for the direct material, we will do again same. Just we are doing as we have done in the previous question. I mean, following the same approach as we have done in the previous question. And for direct material, again per unit into the actual level of activity. See, the difference in the previous one in this question is that previously we are calculating the per unit. Here they have provided us the ready-made figure. Okay, but yeah, so for variable overhead, yes, we will do the same. We will multiply per unit into the unit actual level of activity. But for the fixed overhead, here we will not multiply 8 into 13,600. This is incorrect. Student obviously do repeat this kind of mistake in the exam, and they obviously failed by 1 or 2 marks. Okay, so here we need to multiply 80 with the budgeted level of activity because the fixed cost will be same. Okay, it will not be sense. So that's why 80 into 15,000 will be 1. It's a 200,000. Yes. So now question didn't ask you to calculate the profit. So let me remove this line. Otherwise you guys might get confused. The question is asking only to provide you the revenue cost figure, total cost figure, and the total cost figure is our direct material, labor, variable, and fixed overhead. Yes, this one is the total cost, budgeted cost allowance content in the flex budget for the October. And the question didn't say to any, they didn't request any format, didn't provide the format in which you need to write your answer. So it's very simple. You need to just copy paste this information. Okay. Okay. Now next question. The following extract is taken from the overhead budget of LEB Ltd. The budgeted activity is, yeah, there are 2 budgeted level of activity, and now here we have to use the high-low method. Obviously, the cost per unit will not be the same in this case. So what would be the budgeted overhead cost uh, for the activity level of 80%. So here we can't use high-low method. Why? Because if you divide 100,000 by 50, it will give you 2,000, and 112 into 500 divided by 75, it will give you the 1,500. So as the per unit cost is not same, that means it's a semi-variable one. That means some portion is fixed, some portion is variable. So that's why we need to use high-low method. And in the high-low method, what we do, we calculate the variable cost per unit. And how? By just subtracting the cost and dividing by the level of activity. So here it is, I have done for you. So you can see I have just taken 100 112 and 500, and then subtracted it from the 100,000 and then divide by the difference in the level of activity, and this give me the variable cost per unit of 500. And now we will put this variable cost per unit in the any one level of activity. So I will go for 75%. So at 75%, my total cost is 112,500, and this total cost is made up from the total variable cost and the fixed cost, right? So variable cost, we know that is a 75 into the 500 plus the fixed cost, and this will equal to the 112,500. Now we will just calculate the fixed cost by taking this figure on the other side, and that will give me the fixed cost of 75,000. So now we will calculate for the 80% of activity. So at 80% of activity, we need to find the total cost, and total cost is equal to variable cost plus the fixed cost. It's a total variable cost, not the variable cost. It's a total variable cost. Yes. And how can we find the total variable cost? It's 80 into 500 and plus fixed cost is 75,000. And this give me the figure of 115,000, which is our answer. So yes, we are done. So last question. So last question is same as we have done previously. So I must say you guys to give a try by yourself. In case still you have any confusion, you are not able to solve me and not solve this question, please comment me in the comment box. I will try to address your query, and I hope you have enjoyed while solving this question. And we are done with the now budgeting part. In next video, let's see what the comment I am getting from my viewers. So stay tuned with my channel. Don't forget to subscribe and share. Thank you so much.